the world's gold standard just got dethroned. Big time. In a move that shook financial capitals from London to New York, Russia and China straight up sidelined the London Bullion Market Association, the LBMA, the powerhouse that's ruled global gold trading for over a century. And no, this isn't just another boring headline. This is a seismic shakeup in the way global finance actually works. For decades, the LBMA was the invisible hand calling the shots on gold prices. It was a referee everyone trusted in a market worth trillions. Every single bar traded internationally, every hedge fund bet, every central bank reserve. It mostly flowed through or referenced LBMA standards. It was the gold standard, literally and figuratively. But on this day, that power, gone. Poof. Market analysts woke up to headlines that made their jaws drop. Gold prices were bouncing all over the place. Traders were scrambling to figure out what the hell just happened. The financial establishment, usually so smug and confident in its systems, suddenly had to question everything they thought they knew about precious metals trading. So, how did we get here? How did two countries take down what seemed untouchable? Let's rewind to 1987. That's when the LBMA was formally established, though its roots go way back to 17th century London coffee houses, where merchants first started trading precious metals. By the time it became official, London was already the world's gold HQ. LBMA wasn't just a market. It was a judge of quality, the setter of rules, the gold yardstick everyone measured against. Its good delivery list decided which refiners could play on the world stage. Its twice-daily gold fix became the global reference price, from Mumbai jewelry shops to Fort Knox vaults. Think about that for a sec. One institution in one city essentially controlled how the world valued and traded gold. Banks, governments, investors, they all sync watches to London time for that price fix. At its peak, LBMA handled over $20 billion in gold trades every single day. It was the heart-pumping life through the global gold market. Western financial systems got hooked on that setup. Dollar dominance, Wall Street trading desks, European central banks, all leaned on LBMA's credibility. It was so ingrained in the system that imagining another way, that was unthinkable. But history doesn't lie. Every empire, no matter how entrenched, eventually faces challengers. Roman Empire? Gone. British Empire? Declined. Gold standard? Abandoned. And now, the LBMA, the modern gold empire, faces its reckoning. While London was chilling in its dominance, two powers on the other side of the world, they were plotting, building, waiting. This isn't just about gold. It's about power. For Russia and China, LBMA wasn't just a market. It was a symbol of Western financial hegemony, the system that sidelined their currencies, slapped sanctions on them, and kept the dollar on top for decades. Every ounce flowing through London reminded them who ran the show, and they decided it was time for a change. Russia kicked things off after 2014. Sanctions hit hard post-Crimea, freezing assets, blocking transactions, economic warfare through the very systems they use to trust. Lesson learned. Rely on the West, and they control you. China? They were playing the long game. As the world's largest gold producer and consumer, Beijing saw the value in controlling physical gold, real wealth. While the West treated gold like just another commodity, China treated it like insurance against dollar dominance. They hoarded, built infrastructure, and waited. Together, Russia and China had a bigger plan, de-dollarization. BRICS, Brazil, Russia, India, China, South Africa, started exploring alternatives to dollar-based trade. Bilateral deals popped up. Currency swaps multiplied. At the center, gold. Real tangible gold. LBMA wasn't collateral damage. It was the target. As long as London called the shots, Russia and China were playing by someone else's rules. They wanted their own board, their own game, and they had the patience, resources, and strategy to pull it off. So, how do you take down a century-old institution? Not with bombs, not with speeches. You do it with infrastructure, incentives, and alternatives no one can ignore. Russia led the charge with its own domestic gold market, outside LBMA's grip. By 2017, the Central Bank of Russia was buying gold from local producers at competitive prices. skipping international markets. By 2020, they were one of the world's top gold holders, over 2,000 tons. Every ounce was one less flowing through London. China's move? Even slicker. In 2016, the Shanghai Gold Exchange launched its benchmark price, straight up challenging LBMA. Unlike London's opaque system, Shanghai offered transparency, physical delivery, and yuan-denominated contracts. Gold trading without dollars, without London, without Western nod? Now that's power. And the incentives were genius. Gold for yuan contracts let oil-exporting nations dodge dollar settlements entirely. Saudi Arabia, Russia, Iran suddenly had options. Sell oil? Take yuan. Want something stable? Buy gold in Shanghai. The whole transaction bypassed Western finance. Russia and China also stacked their reserves aggressively. Western central banks? Stagnant. Moscow and Beijing? Buying heavy. By controlling supply and creating alternative demand, they drained liquidity from London, weakening LBMA's relevance. Then came the knockout punch, direct bilateral trades using gold outside LBMA standards. Two nations agreed to trade in gold, priced in Shanghai, settled in Russian or Chinese banks. London's role? Zilch. LBMA wasn't destroyed, it was made irrelevant. Markets hate uncertainty. And Russia and China just dropped a bomb of it. Gold prices became volatile. LBMA's fix? Diverging from Shanghai. Arbitrage opportunities popped up. Confusion reigned. What's the real price? Where do you even look? Nobody knew. Institutional investors, pension funds, central banks, they faced serious head-scratchers. Their hedges, risk model compliance, built on LBMA standards, were now shaky. Fund managers scrambled to recalibrate exposure and assess counterparty risks. Western banks felt the sting. LBMA trade volumes down. Refiners on the good delivery list. Clients wanted different certifications. Storage facilities, London, Zurich, New York, saw clients think about moving gold closer to emerging hubs. The bigger picture? Countries with dollar reserves started rethinking strategy. Gold decouples from Western systems. What else could follow? Trade agreements started using alternative settlement mechanisms. Central banks diversified reserves and trading relationships. For Russia and China, the chaos was gold. Every shaken investor, potential convert. Confidence in Western systems eroded. The fallout was a feature, not a bug. Here's the kicker. Once trust fractures, it's nearly impossible to rebuild. LBMA's power wasn't about force. It was consensus, belief, and shaken beliefs rarely bounce back. This isn't just numbers and price spreads. It's about trust, power, and perception. History repeats. 1971, Nixon ended the gold standard. Bretton Woods? Thought unshakable until it wasn't. Medici, Dutch trade dominance. British pound dominance, all toppled by challengers with patience, better systems, or just time. What kills entrenched institutions? Usually complacency. LBMA assumed it was untouchable. They underestimated the competition, overestimated their indispensability. Centralized control? Super vulnerable. One city, one institution? Single point of failure. Complex systems fail. It's inevitable. So, future global gold? Welcome to the multipolar market. Fragmented, competitive, different. Shanghai is becoming the main reference for Asia. Moscow rising for Eurasia. Dubai for the Middle East. Singapore as a neutral Asian hub, each with its own standards, networks, and ecosystems. Uniformity? Gone. Regional preferences rule. Investors face challenges and opportunities. Complexity, risk, arbitrage, diversification. Savvy players adapt. Slow ones get left behind. Central banks? Strategic choices. Stick with London for familiarity? Pivot to Shanghai for pragmatism? Or hedge between both? Most hedge. Feed in both camps while dust settles. Russia and China? Still growing influence. Not just markets. They're setting new standards, training traders, building digital infrastructure that could leapfrog the West. Blockchain gold trading, digital gold currencies, automated settlements. The next phase could make traditional LBMA trading obsolete. The future isn't LBMA dominance. It's multiple players, tech disruption, no single authority. And this isn't just a gold story, it's a glimpse at global finance's future. The dollarization is on turbo. Dollar's global reserve share, 70% in 2000, 58% today. Not reversing. Trade deals dodge the dollar. China trade with Russia in yuan/rubles. India buys oil from Iran in rupees. EU explores digital euro. Alternative systems multiplying. Western dominance getting challenged. IMF, World Bank, SWIFT, they've got competition. HIIB, Belt and Road, digital payments bypassing SWIFT. Multipolar economic system emerging. Not US-led, not China-led. Multipolar. Western nations confused. Post-World War II order dissolving. Sanctions, market access, financial pressure less effective. Emerging powers, opportunity to rewrite rules. Corporations, investors, citizens, navigating a messier, competitive, unpredictable world. LBMA's fall, not just gold, it's a warning. The era is over. A new chapter starts. London's gold supremacy, gone. Shanghai, Moscow, and other hubs are rising. LBMA may survive, but never the same authority. Russia and China proved entrenched institutions can be undermined through patience, infrastructure, and alternatives. Power isn't permanent. It's contested. Lessons go beyond gold, currencies, trade systems, tech, geopolitics. Multipolar competition is the new norm. Pay attention. Adapt or get left behind. Build alternatives or stay dependent. Recognize shifts or get swept away. The gold empire has fallen. The old order won't return. The question now, who shapes the next chapter? The era of LBMA is done. Game over. New chapter? Just begun.